as envisioned by Zen Business.
Welcome back, everyone, to the deep dive. Ready to dive into something that honestly touches all of our lives, even if we don't always think about it: currency exchange.
Absolutely.
Yeah, and specifically today, we are going to untangle, I think, hopefully, the mystery of the USD to INR rate. So that's US dollars to Indian rupees using what you sent over to us.
It's a really cool example, actually, because it shows just how interconnected global economics are.
Yeah, for sure. It's so much more than like how much cash we get when we go on a trip, right?
Right.
Our sources say that on March 4th, 2025, the rate was 1 USD to 87.348581 INR. Well, what does that even mean? What does that string of numbers tell us?
Well, it tells you how much Indian currency you would get for every US dollar.
Okay.
So in essence, at that point in time, 1 US dollar could buy you over 87 Indian rupees.
Okay.
But it's important to keep in mind that this is what's known as the mid-market rate. It's essentially an average that's used as a benchmark.
Oh, okay. So that's not what we'd see like up on the board at the airport currency exchange.
Checks.
Yeah. I've always wondered about that, actually. Like, how do they even come up with those rates? Is it just somebody like making it up?
Well, not quite. The rate that you actually get at an exchange counter, it takes into account a bunch of different things like fees and the provider's margin and even the day's trading activity.
Oh.
But the fundamental principle that underpins it all boils down to this concept of supply and demand. Just like any other commodity, the value of a currency, it fluctuates based on how much is available and how much people want it.
So if there was a huge uptick in people wanting to convert their USD to INR, let's say maybe because of a boom in travel to India or tons of investment there, would the price of the rupee go up compared to the dollar?
Exactly. And that's where things get really interesting, because the strength of a country's economy, its interest rates, government policies, global events, all of these things can influence the demand for its currency.
Wow. So it's like a giant puzzle with all these pieces sort of like interlocking, and they're all kind of creating that final exchange rate. Okay, I'm starting to see why it's always changing.
Yeah.
I noticed that our sources mention the X currency data API. What's the role of something like that in this whole process?
So the X currency data API, it provides real-time exchange rate data, which is absolutely critical for businesses that are engaged in international transactions.
Okay.
Like, imagine a company in the US that imports goods from India. They need to know the exact exchange rate so they can price their products properly and manage their profits effectively.
Makes sense. And I bet investors keep a close eye on exchange rates too, especially those dealing with foreign markets.
Absolutely, because fluctuations in exchange rates can have a significant impact on their investment returns.
Right.
Like, let's say, for example, an American investor buys shares in an Indian company, and then the rupee strengthens against the dollar. Well, when they convert their investment back to USD, it'll be worth more.
Okay, so it's not just about, being a savvy traveler and getting the best deal on your trip to India. It's about understanding how to navigate the global economy. Yes. Making smart investments, and even like running a successful business internationally.
It is. Yeah, it really is. And as we were saying, those fluctuations can really have a ripple effect across entire economies. Let's think about import and export businesses for a second.
Okay. Yeah.
As a good example. So if the Indian rupee weakens against the US dollar, that means products from India become cheaper for American buyers, right?
Oh, so a win for Indian exporters.
Potentially, yeah. They could sell more, boost their profits, and maybe even create more jobs back home.
Okay, yeah, but that makes sense.
But there's always a flip side to everything, right?
Right.
A weaker rupee also makes imported goods more expensive for Indian consumers.
So that new tech gadget from the U.S. that everybody wants suddenly becomes a lot more expensive for someone in India.
Exactly. And that can fuel inflation, which then has an impact on the Reserve Bank of India's decisions on interest rates. And that circles back and affects the exchange rate. It's all connected.
Whoa, it's like this never-ending dance between currencies and economies and even global events.
It is.
Speaking of global events, you mentioned that those can also impact exchange rates. What kind of events are we talking about?
Oh, well, think about major political shifts, natural disasters, or even significant economic announcements. Let's say, for instance, there's a huge breakthrough in renewable energy technology in India.
Okay, yeah.
That could attract a ton of foreign investment, which would increase demand for the rupee and potentially strengthen it against the dollar.
So staying informed about what's happening in the world is key to understanding these shifts.
Absolutely.
Got it. But how are these rates actually determined in the first place? Is there like a secret formula or a room full of people setting these numbers?
Well, there's no secret formula,
Right.
but it's not random either. It all boils down to the foreign exchange market, which is often called Forex or FX. It's this decentralized global marketplace where currencies are traded 24/7.
Sounds intense. So is it basically like a massive auction where the price of a currency is constantly being bid up or down?
Yeah, you got it. Banks, financial institutions, corporations, even individual traders all participate buying and selling currencies based on their perceived value and their future expectations.
It's kind of wild to think that something like an exchange rate, which seems so abstract, is actually the result of millions of decisions being made in real time all over the world.
Yeah, it really is. And the more players involved, the more liquid and efficient the market becomes, which leads to a more accurate reflection of a currency's true value.
That makes sense.
Yeah.
Earlier, we talked about how companies use things like the X-Currency Data API to get accurate exchange rate data. What about individuals? What if I'm planning a trip to India? How can I make sure I'm getting a good exchange rate?
Well, there are a few things you can do. First, try to avoid exchanging currency at airports or hotels. They tend to have less favorable rates and higher fees.
Okay, right, makes sense.
Yeah, you might want to consider using a reputable currency exchange service or even withdrawing local currency from an ATM using your debit card.
Oh, good tip.
Yeah.
And I know some travel credit cards offer really competitive exchange rates and don't charge those foreign transaction fees, which can add up.
Yeah, absolutely. And for businesses that are dealing with larger sums of money, there are more sophisticated hedging strategies they can use to kind of minimize their exposure to exchange rate volatility.
You mentioned hedging strategies before. Can you remind me what those are? It sounds kind of complicated.
Sure. Think of hedging as a way to protect yourself against potential losses from exchange rate fluctuations. Like, let's say a company enters into what's called a forward contract
Okay.
to lock in a specific exchange rate for a future transaction, even if the market rate changes.
Interesting. So it's kind of like an insurance policy against currency risk.
Exactly. And there are different types of hedging strategies, each with its own level of complexity and suitability for different situations.
Okay. So we've learned that exchange rates are always in flux, driven by this really complex web of factors, and they have a real impact on businesses and individuals alike.
Yeah, that's a great summary.
All right. So let's bring it back to our original example, the USD to INR exchange rate. We know it was 1 USD to 87.348581 INR on March 4th, 2025. What does that tell us about the relative strength of the U.S. and Indian economies at that point in time?
That's a great question. It tells us that at that particular time, the market perceived the US dollar to be stronger than the Indian rupee.
Okay.
A stronger dollar often suggests that the US economy is performing well, attracting investment and increasing demand for its currency.
And on the flip side, a weaker rupee could be a sign of some uncertainties in the Indian economy, maybe making investors a little hesitant.
Yeah, that's one possible interpretation. But of course, it's never just one single factor at play. Remember, the exchange rate is influenced by a whole bunch of economic, political, and even social factors.
Right. It's like that giant, ever-changing puzzle we talked about earlier.
Yeah. Exactly. And while predicting future exchange rate movements with 100% certainty is impossible, understanding these key drivers can help you make more informed decisions and navigate the global financial landscape with more confidence.
Yeah, this has been a really insightful look into the world of currency exchange. We've demystified exchange rates, uncovered the forces that drive them, and even learned some practical tips for navigating this complex landscape.
Okay, we've covered a lot, but one question that I keep kind of coming back to is if exchange rates are this unpredictable, how can anybody plan for the future? I mean, it feels like you're trying to hit a moving target.
That's a really good point, and it really emphasizes why it's so important to stay informed. You know, while we can't predict the future with complete certainty, we can at least get a sense of the general trends and potential risks out there.
So instead of trying to figure out, what the exchange rate is going to be exactly, 6 months from now, it's better to just understand like the bigger economic picture and kind of what might push that rate one way or the other. Exactly. Yeah. Like if you're planning that trip to India 6 months out, don't get too caught up in the day-to-day fluctuations. Focus on the overall economic outlook for both the US and India.
So let's say experts are predicting like strong economic growth in India, but some slowdowns in the US. Does that mean that the rupee might strengthen against the dollar over those 6 months?
That's a reasonable assumption, But, there are always those unexpected events like a political shift, a natural disaster, something that could come out of left field and really throw things off. So flexibility and adaptability are key, and so are having strategies in place to mitigate those potential risks.
Right, like exchanging some currency in advance to kind of lock in a favorable rate.
Yeah.
Or using a travel card that doesn't have those pesky foreign transaction fees.
Exactly. Those are smart moves.
Yeah, it sounds like navigating the world of currency exchange is all about being informed, planning ahead, and having a few tricks up your sleeve.
It is.
Well, I think we've really done a good job breaking down this complex topic into something that's, understandable and hopefully even a little bit interesting.
It's been a fascinating exploration, and this is really just the tip of the iceberg. The world of finance and economics is constantly changing, so there's always more to learn.
So true. Well, to wrap things up today, we're going to leave you with a question. What global events or technological advancements do you think could really reshape the currency exchange landscape in the coming years? Something to think about as you continue your own deep dive. Let us know what you come up with.
Until next time, keep